So here we are, 3 weeks into 2022, and the market is a wreck. Depending on what market you're looking at, it could be down 5 to 15% already. Now, here's the thing. Here's the questions we must be asking ourselves. Where should we hide? What is going up right now? What went up last year and is still going up this year? And what didn't go up last year and is going up vice versa? We really want to understand where price is the strongest. And this matters whether you're 40, 50, 60, or 70 to really understand where price is the strongest. We're going to look at that, so stick around. Hey everyone, this is RC Peck, and I want to talk with you about what is going on in the market and whether you're in the market, not in the market, own annuities, which mean you probably don't care or don't. This matters because it's going to help you understand about price direction, and you want to follow price direction because that's telling you where the stability of the market is, right? Where money is flowing into, people saying, hey, I want to buy more of that. That's the only reason price goes up, is because people are saying, hey, the price is going up. I want to buy more. So with the market in correction mode right now, it's still just correction, it's not crash. In correction mode, we really have to understand what's going on. So let's do this. Let's jump over to the price charts. And the way I want to do this is I want to frame this just from the beginning of the year. I just want to start at the very beginning of the year and just kind of go around, look at sectors, look at different parts of the world, and really understand what is and is not doing well. So on the screen here, there are two parts to this chart. The top part is just simply showing the performance year to date. So this is SPY, and its performance, I'm going to round on all of these. Its performance is negative 8% year to date. And then below on the bottom part, even though it's a bigger part of the chart, is the actual price of SPY. And each one of those candlesticks, that's what those shapes are called, represents 2 hours of trading. So we can get an idea that clearly the market is falling, and year to date, only 3 weeks into the year calendar-wise, S&P is down. So let's use this as the standard. Let's kind of understand what parts of the world first are doing better and worse. So let's go all world ex-US. So this is VEU, that's all world ex-US. Basically the rest of the world, it's only down 2%. So that means international is doing better this year than US domestic. It's still down, but it's doing a lot better. And then we have Europe. Europe's down about 2%, doing better because what I want you to anchor to is the spiders, S&P 500 with dividends reinvested, is down 8%. So far, Europe's doing better. International's doing better. Let's try emerging markets. Emerging markets is actually positive for the year. It's up 0.3%. So this is a big shift, right? Because emerging markets got absolutely crushed last year. Let me just bring up emerging markets on this other screen here. And this is just, I'm super zoomed out on this. This is 3.5 years. And you can see here, this is emerging markets, what it did last year. So yes, it's up this year by 0.3%, but you can see the trend is still down. Okay, but still, emerging markets is doing better this year than anything we've looked at so far. Let's just quickly look at China. China's doing great, up 5%, 4.6% to be exact, but we're rounding. So this is interesting, right? International's doing better. Let's look at Brazil. How's Brazil doing? Brazil's doing amazing. Brazil's up 7%. So that's interesting. So let's think about this for a second. Domestic, US domestic, international, international. Of international, what's doing better? Emerging markets is doing better. Brazil's doing better. China's doing better. So those are the larger emerging markets, and they're outperforming every other part of the globe right now. So that's what we know. Now, I can also bring up EWZ, and you can see it on a 3.5-year range in C2. So this was EWZ last year, so also didn't do well. And if your brain looks at this price chart, it is a 3.5-year price chart. It's just a weekly price chart. It means a lot of data is kind of deleted, so we get rid of a lot of the noise. You can see that Brazil's kind of lost right now. So as far as equities about geography, it is international and it is emerging. And specifically, I just picked these two. There could be others, but China's doing well, and so is Brazil. Brazil is EWZ. That's the symbol I used, and the symbol I used for China is FXI. Let me just quickly check A shares. That's another way. Yeah, A shares, which is another way of measuring China, is actually down. So FXI is doing much better, and that's up 4.6%. Okay, The next thing I want to know is just about sectors and slices and segments. Which ones are doing best? So let's just go mega cap, look at the Dow Jones. So the Dow Jones is down, I'm going to round 6%. So doing less bad than the S&P. What if we went equal weighted? Equal weighted is down 6%, so still better than the S&P. Let's go small cap. Let's look at small cap. Small cap is down 8.5%. So small cap is doing worse than the S&P. Let's go micro cap. Micro cap is down almost 12%. So the smallest of the small stocks are getting hit the hardest. So as far as size goes, I think it's easiest to say stay away from the smallest of the small, and then also stay away from micro and stay away from small. We can look at mid caps here. Mid caps aren't doing well either. Mid caps are down almost 9%. So mid caps are doing worse. Small caps are doing worse. Micro caps are doing worse. And the mega caps, just by measuring the Dow Jones, is doing better. So all things being equal, mega cap is doing better if you're going to be in the US. Let me just put in Alibaba. Alibaba is a mega cap, and that's up 4% for the year. Again, the year's only 3 weeks old, but still, it's the information we have. Okay, let's quickly look at some sectors. The only sector that's doing well this year is energy. It's up 12%, and that's down from 18%, but it is still way, way positive for the year and is absolutely crushing it. The largest stock in energy is ExxonMobil, which is up 17.5% for the year. So we've got mega cap, and we've got energy, and we got US domestic in that symbol alone. So yes, there are things going up. Let's look at some of the defensive sectors. Utilities are down. They're down 4%, which is better than the S&P, which is, S&P is down 8%. So XLU is doing better, relatively speaking. Staples, let's see how Staples is. Staples are doing great. They're still negative, but they're only down 1.5%. So that's telling me no one is panicking yet. And let's look at S&P low volatility, which is down 5%. So what we can say for sure is people over the age of 50 are not panicking yet, because if they were, we'd see SPLV, which is S&P low volatility. We'd see that down a lot more. We see utilities down a lot more. We'd see staples down a lot more, and that's not happening. Let's look at dividends. Dividends are just flat. So that's super positive. So dividends are flat so far for the year. Dividend producing stocks are flat for the year. Value, let's just quickly look at value. Not as good. Value is down 3.7%. Certainly not the 8% that the S&P is down. But what are we looking at? We have utilities still falling, but not doing as well as energy. So they're doing their best to hold on. Dividends are definitely doing better. Energy is the place to be. A couple others. Let's look at healthcare. Healthcare is down 8%. Stay away from it. Real estate was the second best sector last year. It's down 9.5%. So you want to stay away from real estate right now, at least through the correction. Until further notice, I think this is a correction. The one thing I do want to point out is at the end of 2018, Jerome Powell said he was going to raise rates 3 times, and the market crashed 20%. And the only reason it did not stop falling is because he took back his 3 quarter-point increases. I don't think he's going to do that this time, even though the market is falling. So it's going to be really interesting to see if we get down to negative 20% in the stock market, if Jerome Powell changes his point of view, changes his course of action. But as of right now, this is looking very similar to a replay of the end of 2018. Okay, a couple other things. Let's just quickly look at technology. Has been the leader for years. Not doing well right now, down a little over 11%. SMH, which is semiconductors, down 12%. So that means this correction is not over. SMH, all things being equal, usually leads up or down. Technology is leading down. A couple more things, guys, and then I'm going to hit the pause button. Let's talk about some non-equities here. Let's look at gold. How's gold doing? Gold's flat for the year. All things being equal, I'll take flat. Let's look at silver here. Silver's looking good. Keep in perspective, this is gold. Let's just quickly look at gold with the tracking symbol GLD. Not the worst. How's that for marketing gold? As long as gold stays above 1800, you're allowed to be bullish. The 1800 is the blue line on the screen. So, so far it's holding. Gold has been down since August of 2020. So really not the best place to be. But maybe this is the year. Silver, and then here's silver here. Again, same time since August of 2020, just doing nothing. Okay, I'll leave you with one more thing here. Commodities are doing well. So DBC is a tracking symbol for commodities. It's up 6%. This is absolutely the asset to be. It was the best asset last year. It was up 40% last year. There was no other asset up. So commodities are doing well. That's what we see on the screen here, up 6%, while the stock market is down 8%. And commodities did great last year. So commodities did great in 2020. They did great in 2021. And here we are in 2022, and they're moving higher. So actually, let's just stop with that. Let's stop with, because I'm talking really fast. I do my best to keep these to 10 minutes, but let's just kind of bring it all together. Equities by themselves, international is beating US domestic. If we look to international, emerging markets are outperforming developed markets. I showed you Brazil and China, and they're both doing really well. If you stayed in the US, energy is doing the best. And let's just say dividend producing stocks are right behind that, but energy is absolutely crushing it. Energy crushed it last year. It was the lead sector. But I think the big news really is, what is the main asset that's winning? It won in 20, it won in 2021, and now it's winning in 2022, and that is commodities. That's not a new lifetime high, because if we zoom way out here, and this is a tracking symbol, this is DBC, but you can see commodities are now back to its high in 2014. So commodities are moving up, and they continue to move up. And I think that's the biggest takeaway, that commodities are moving higher. Stocks are falling pretty hard right now. I didn't talk about bonds. I can just quickly look. Here's BND, which is basically the US bond market. It's down about 1.5%. So people are not flooding into bonds. TIPS are down about 2.5%. Mortgage-backed securities, I always say that. Municipal bonds are down 1.4%. Mortgage-backed securities are down 1.5%. So bonds are down. Now, clearly they're not falling as badly as stocks, but money's not really rushing into bonds right now. So the big news really is commodities are doing well. And if you think about it, XLE, which is the energy sector, that is a way of buying equities that play the commodity asset class. So either way you look at it, you can buy the commodity and you're doing great, or you can buy the equities that have to do with the commodity, which is energy, and that's doing great. Thanks everyone for being in my world. I appreciate it. Let me know where you think I got it right, where did I get it wrong. I know, hit that like button, leave a comment, give it a thumbs up. And if you like this, you're going to like our other videos. Thanks so much for being in my world. And if things change, I will do some interim drops too, if things start to accelerate. Okay, thanks so much. Bye.